Hello friends, welcome. Today we are going to talk about an important sector, that is steel sector. As you are aware that so many crises are going on, and including the geopolitical crisis, it is having a big impact on the commodity prices. So let us see how the geopolitical crisis is having an impact on steel prices and what is the implication in Indian steel companies. Okay, so friends, my name is Tapan Doshi. I welcome you to my YouTube channel. Please click below link so that you can subscribe to my channel. So let us go and deep dive in this steel industry. So the prices of coking coal, iron ore and steel has surged sharply amid the ongoing war. And Russia and Ukraine are the largest exporter of these commodities. Now because of this, the steel prices are going up. And what is the reason why it is going up? The reason is simple. That Russia and Ukraine together produce almost 100 million tons of steel annually and exports almost 37 million tons, which is 8 to 9% of global net trade. So as you can see, almost 9% of global net trade of steel is been done by Russia and Ukraine. And if they are in crisis, of course, it is going to have an impact on steel supply. Okay. Also, Russia exports almost 30 to 32 million tons of coking coal annually. That is 14% of seaborne market. Now, after Australia, which is the highest exporter of coking coal, Russia is also among the major country who almost export almost 14% of seaborne market. So as a result of this, even the raw material prices are increasing and that is impacting the steel company's margin. Now because of this, supply of steel and supply of coal will have a bigger impact in commodity market. So another point is Russia, as I told that Russia export 30 million tons of steel in 2021. Okay, so if you see, main are HRC, that is 22%, billet is 50%. Now European countries forms almost 29% of the total overall steel exports from Russia. So if the export from Russia is halting, that will have an impact on the commodity prices in European countries. Okay, because 29% of overall steel export from Russia comes from here only to EU. Okay, so basically even you are aware that Russia is also exporting almost 58% of natural gas from Russia. So that is also having the even natural gas prices also. Again, next point, Russia is the third largest exporter of coking coal across the world. Okay, so the Australia is almost 58%, but after Australia, 14% is done by US and 11% is done by Russia. As a result of this, coking coal prices are going up and that is impacting the raw material prices of the steel companies. Then Russia and Ukraine forms almost 8% of global net trade in the finished steel products. Okay, so you can see here, China is 11%, Japan is 6%, Russia is 5%, Ukraine is 3%. Okay, so that is why it is having an impact on steel prices. Now what this chart shows? This chart shows that Russia exports almost 29 million of tons of iron ore in 2021. Okay, so as you can see here, it has done more than 2020 and 2019. So this export is completely halted. Again, Ukraine exported almost 40 millions of tons of iron ore in 2021. So both Russia and Ukraine is having a significant stake in the export market in steel industry. So as I told that it forms 8% of the global net trade. Now, as you can see here, domestic HRC prices has increased by 8% month on month, while secondary rebar prices increased by 17% month on month by in March 2020. So you can see that prices of steel is increasing in India because of the scarcity and supply issues. HRC prices increase globally except in US. So you see that is UK is red line, Germany is grey and even China is almost light gray. You see, all are increasing. However, only US, there is a drop in HRC prices. So again, because of the average coking coal price increase is that 26% month on in March 22, you can see here the raw material price of the steel companies has increased. Okay, now most of the major, you can say major component in steel companies is coal, coking coal. And if the prices of coking coal is going up, then there is an issue. Now, Asia steel spread declines on higher costs. So, if the coking coal prices are increasing, of course, then raw material cost will increase, and if the raw material cost is increased, of course, the margin will go down. So, Asian steel spread decline on the higher cost. As you can see in March 22, it is on the lower side. However, in India, there was a decline on the spot basis. However, because of the consumption lag, there was a increase in the spread. Now, let me tell you in detail that even though the cost of raw material was high, correct, the prices also gone up, but the consumption was not there. And as consumption was not there, they have a stock earlier, which are there, which steel companies are selling at a higher level now. As a result, the Indian spread is increasing. Okay. Now, steel production increased 7% year-on-year basis in February 2022. Okay, so production has increased by 7%. However, consumption has declined by 4% year-on-year basis. So, production has increased, but consumption has decreased. But Indian net export has increased in February 2020. So, you can see the trend line here. Okay, it was going down from November, December, January, but suddenly there was a shoot in export. Okay, so Indian steel companies started to export more and more because their internal consumption was not there and their demand was not there. That's why they are exporting more at a higher level. That's why their margin were increasing. Now, steel companies also are deleveraging faster than earlier pace. Okay, so you can see here that earlier Tata, for the Tata Steel I'm talking about, that net to EBITDA ratio was 2.7%. Okay, that has come down to 0.6% by 2024 estimated. Okay, so from 2.7 to 0.6. Similarly, JSW, it will come down from 2.6 to 1.3. For JSPL, it will come from 4.9 to minus 0.3. So they are deleveraging a lot. Similarly, for SAIL, it will come down from 2.9 to 1.3. So as you can see, more and more steel companies are paying off their debts, and that's why their net debt divided by EBITDA is coming down, which is a very good sign. And so because of, if they start deleveraging more, their interest cost will be less and their profitability will be on a higher side. As a result, many companies in steel companies comes on a buy list, and so because of this, my recommendation, basically our recommendation is that Tata Steel a target of 1500, Jindal Steel and Power for target of 565, and NBC for target of 175. These are the stock target which we recommend, because at the end of the day, steel companies will be beneficiary as they are deleveraging fast. So higher prices at current level is helping their margins also. So guys, this is what the recommendation for the steel companies. Hope you like this video, and if you like this video, please click the like button and subscribe to my channel. And also, if you need to know more and more fundamental tips and how to do fundamental analysis, I am going to conduct a free webinar, and you can click below webinar link and join my webinar, which I am going to conduct this weekend. So guys, stay healthy, stay safe, and see you soon in the next video. Thank you.